The thing about reserve currencies is part of what makes them safe is that everyone else thinks they're safe. You have, I think, a financial crisis in transition, and then you end up in a not a world where you can't park your assets anywhere, but a less secure and stable one.
Henry, for all of the upheaval of the past couple of weeks, the on-again, off-again tariffs and so on, that's not the only thing that's troubled you in this time.
No, the tariffs aren't the only thing. It's also the financial market reaction, which seems to be beyond a stock market sell-off. It looks like a generalized turn away from American assets by investors, which could, perhaps if it continues and gets worse, result in a threat to the dollar's status as the world's reserve currency, which is the status on which the global financial system is built and on which a lot of the global economy relies.
What's happening now that's giving you that fear?
Since President Trump announced the so-called reciprocal tariffs at the start of April, there have been big falls in equity markets. Everyone knows about that. The more alarming signal that's happened is this simultaneous sell-off in bonds and in the dollar. So normally what happens when bond yields go up is that the dollar goes up too, because investors can get more by buying the dollar and holding those bonds. When your bond yields go up but the dollar goes down, it means that there's this generalized sell-off, a flight from those assets, which suggests investors are somewhat fearful. It's the kind of dynamic you see more in emerging markets. It's the kind of dynamic you saw in Britain after the disastrous mini-budget under Liz Truss's premiership. And that's what's sending this signal that maybe there's this risk premium now on US assets. And it's that's worrying. And what's also going on at the same time as the trade war is that Congress is preparing to loosen the purse strings as it renews the Trump tax cuts from the first term and potentially tries to add to them. And it's passed this budget framework, which is very aggressive in terms of the fiscal loosening that could go on, potentially more than the Trump tax cuts, the COVID stimulus and Biden stimulus combined, according to the Committee for a Responsible Federal Budget. So this big fiscal loosening is also enough to catch the attention of bond markets and dollar investors, I think.